In today's video, I want to teach you about qualified charitable distributions. This is one of the easiest ways that we find every year as a way to help people save money in taxes and still give to their favorite charities. And I'm going to show you this brand new feature that we built into the retirement budget calculator so that you can see the benefit that it would have to your specific situation. So if you're ready, let's dive in. Okay, so we're in the retirement budget calculator, and I've created this hypothetical scenario to show you the power of the qualified charitable distribution. And down here on the left-hand side, you'll see we have this new scenario called the QCD strategy. So I'm going to show you how to use this QCD strategy, but first of all, I want to show you how to set it up. So over in the budget, we've created this budget where these people are giving $1,000 a month to their church. This is their tithe. And we're going to say down here, we're going to select latest life expectancy, meaning that as long as one of them's alive, they're going to give $1,000 a month to their church. We also set this at 0% inflation, just so that we could make this example as easy as possible for you to follow. So we create that tithe, that expense on their budget, and then we come down to the retirement optimizer. And down here in the expenses, you'll notice every year I can click and I can see there's my tithe, $12,000 a year. I can come down here to when they're 76 and 75 years old and they're still giving $12,000 a year. I can come all the way down to age 87 and 86, and you can see they're still giving $12,000 a year. So the first thing we do is we create that expense. What we want to do now, though, and let me explain to you the qualified charitable distribution if you don't understand what this is or how it works. Essentially, what the government says is that when you turn 70 and a half, you can give money directly out of your IRA to your charity, as long as it's a qualified charity. This can't go to something like a donor advised fund, but for people that are giving to their church on a regular basis, this is a really great strategy. So at 70 and a half, it used to be that's when required minimum distributions were mandated that they had to start. But now RMDs don't start for a lot of people until age 73, and for some of us, they don't start until age 75. But when they changed the law, they said you can still do these QCDs, these qualified charitable distributions, starting at age 70 and a half. And essentially what it is, when you turn, let's say 73, you're forced to take money out of your retirement account. And so what the QCD does is it says, well, instead of taking all of the money out of the retirement account and then giving to my church, what I can do is I can give money directly to the church from the IRA. It satisfies the RMD, it satisfies the minimum amount that I have to take out, but it reduces the amount of taxable income that I have. And you say, well, what's the difference? If I'm going to get a tax break anyways. Well, under the Tax Cuts and Jobs Act, what they did was they increased the standard deduction so high to the point that most people don't itemize their deductions anymore. And you can review this for yourself by looking at your tax return or having a qualified advisor look at your tax return to help you understand if there's a more optimal way to do this. But for modeling purposes, and I'm going to show you, this is almost a $50,000 tax savings to this hypothetical couple just by understanding how to give more strategically. I mean, think about that. That's $50,000 that's not going to the IRS that instead could go to things that you care more deeply about. So this is how it works in the retirement budget calculator. So what we're going to do to model this correctly is we're going to come down to this $12,000 and we're going to change this. Instead of having it go to the second person's life expectancy, we're going to have this expense end at the latest retirement. Okay, so first let me show you what I did there. So now you'll see this green line represents retirement. So if I click on the year of retirement, you can see there's a $12,000 expense for tithing. But if I click in the year after retirement, notice that tithing expense has gone to zero. So now what we want to do is we want to replace that we still want to give the $12,000 to our church. We still want to give the $1,000 a month or $12,000 a year to the church, but now we're going to do it through this QCD strategy. So we come down here, and basically what we do is we create a QCD of $12,000 for each year, 2028, 2029. You notice we take this all the way down to 2042, and we're just doing a flat amount, not a percentage, but that's an option as well. So we're going to save this, which turns on the QCD. Now what happens is, remember, they were given a $12,000 out of their budget, but now that they're retired and they're 73 years old, they have to take a required minimum distribution anyways. And so over here, you'll notice we've got the RMD coming out. That's the amount that's still going to them as a family. But then we have $12,000 that's being directed right to the church. So you notice if we turn this off, The RMD total for the year is $46,693. But if we turn it back on, now it reduces this down to $34,000 because we have $12,000 going directly to the church. And so this is such a cool strategy because the church is getting the same amount of money, you're satisfying the RMD, but essentially you're paying less money in taxes. So let's look at this from the tax standpoint. If we come over here to the tax tab in the calculator and we look at lifetime taxes, if we don't do the QCD method, we end up with a total lifetime tax. And this is assuming tax rates don't go up, which a lot of people think they're going to. This is keeping these low current tax rates, not even adjusted for inflation, just these low current tax rates. So $331,000 of lifetime taxes if they do no QCDs. If they do the QCD strategy, $283,514. That's $47,789 of tax savings just by utilizing the tools that are available to us in the tax code. And so many people are missing this. And this is just a really cool way to give strategically. Now, another thing I want to bring to your attention here. Notice in the retirement budget calculator, we show them running a surplus every year, whether or not they do the QCD or not. And they're not reinvesting the surplus. For this particular model, we assume that they're just spending all the money. So when we get down to life expectancy, the amount of money left in the accounts at that point is $4,328,000. If we do the QCD strategy, the amount left in the account is still $4,328,000. It's not impacting their cash flow. It's not impacting the ending balance of their accounts. It's impacting their cash flow in the sense that it's $12,000 that's not hitting their tax return. But before, what they were doing is they were taking the full RMD, putting it into their checking account, and then giving money to the church. Now what they're doing is they're, under the QCD method, they're taking just $34,000 that's going into their checking account, and $12,000 is going directly from the IRA to their qualified charity, in this case their church. So anyways, just a really simple thing that so many people miss. This has been a very popular feature within the retirement budget calculator, something that people have been requesting, and I'm so excited to show it to you, and I'm excited to hear what kind of impact it will make on your giving. What kind of impact is it going to make on how much money you pay in taxes? Thanks so much.